Hey guys, Drew here from SwingTradingBootcamp.com, and let's go ahead and take a look and see what the market did last week. Here you can see I have the chart of the diamonds, or the Dow Jones Industrial Average, up. And if you look back on our blog from last Friday, we put in this blue line here indicating to us that this was a potential pattern to watch. This blue line we put in after this bar was put in on Friday. We saw the inside bar accompanied by lower volume, and we put in this blue line to indicate to us that a potential equal high or double top was in the making. And we waited to see if we got some confirmation this week. If the market would have continued to the upside, this entire pattern would have been negated, and we'd have simply removed the line and continued in our uptrend. What we saw on Monday was a gap down, and the selling come into the market on Tuesday as well, and another gap down on Wednesday and Thursday and Friday. So the pattern was confirmed. The double top or equal high is in place. You see this black short-term uptrend line here, and that was broken on the big gap down that we saw on Wednesday as well. So we've gone from a nice bullish week to an extremely bearish week. This type of price action leads not only to confusion but frustration with a lot of short-term traders, and that can be expected in a market like this. Again, a lot of news hanging over the market, and until that decision is made, I think we're going to continue to see the volatility like this in the market. Let's take a look at the chart of the S&P, and you can see if you look back at the Dow, that equal or double top, that equal high or double top that we saw, the S&P didn't really rally quite as far. The stall that we saw here was quickly followed by more selling, which confirmed an actual lower high and now a lower low. So you can see a little bit weaker than the Dow, and it sold off accordingly, and now we're trading again once again back under the 50-period moving average. The Nasdaq's been the strongest of the bunch, pushed to new highs, and now is pulling back and holding actually above its 50-day. So as you can see, a lot of selling in one, and the Nasdaq's holding up a little bit, so a lot of traders are really trying to determine what to do from here. There's some strong sectors now. When we take a look at some of the ETFs, energy that we've been blogging about for some time is continuing its strength. Nice couple weeks of strength here, and then a pullback off of its most recent high. Still holding above its 50-day, at least for now. And the oil services ETF, same type of pattern. Nice move up over the last few weeks, now pulling back, still above its 50-day as well. As to be expected, the technology sector flirted with new 52-week highs back here, and now has pulled back to its 50-day. And there's a lot of opportunity to be had there, but then when you look a little closer, there's some weakness in some of the tech stocks as well. Amazon and Apple are obviously holding up very well, and then you have the semiconductors, which are actually trading down to new lows. The SMH that you see here actually traded to new 52-week lows here. So there were some good charts to trade on the individual stocks in that sector as well. So it leads to confusion. Some tech stocks are strong, some are weak. Where do you go from here? Some of the other weak sectors, the actual industrial sector, the XLI ETF actually traded down to 52 to a new 52-week low last week as well. Extreme selling coming in. Again, just if you look at the relative or the lack of relative strength, you can see that the semiconductors, just taking it for an example, never traded above its 50-period moving average, while the technology sector or the tech-heavy Nasdaq is well above its 50-day this entire time. And the SMHs never broke its 50-day, 50-period moving average. The gap down that you saw on Wednesday now pushes down to new 52-week lows. So that's a sign of real weakness in the market. The XLI, same type of pattern, flirted with its 50-day, quickly reversed, and now it's sold off down to new 52-week lows. Another sector that traded to new 52-week lows was the ever-popular home building sector. Again, bounce up to its 50-day, never broke through it, showing extreme relative weakness, and then a sell-off to new 52-week lows here. So that being said, positive sectors, really negative sectors, positive indices, really negative indices. I think we're going to continue to see this, so you need to be well aware of where you're at. I know a lot of traders are actually sitting on the sidelines until some sort of news comes out. Once news comes out, I don't really think that we're going to see a decrease in volatility. I think we're going to see this continued volatility for some time. So what do you do from here? Like I stated earlier, we've been short-term trading both sides of the market. You have a lot of stocks that are holding up in these sectors quite well, and then you have a lot of sectors that are actually, a lot of individual stocks that are, got hammered this week. You take a look at CCL, or you take a look at ACAM, and there's some, real stocks that have been getting blasted lately that you just, if you're short, it turns out to be a good situation for you, but if you're not, you totally missed the move down. There's some stocks that are holding up quite well. Again, we mentioned the energy and oil services. Some of these stocks are still holding up nicely, simply pulling back off their most recent highs. You have some of the lesser known names making some good moves. Jazz is making a new move to the upside. So as we move into next week, there's going to be continued volatility in the market. We always suggest that you have a list of stocks that are really strong to watch, and a list of really weak stocks to watch as well. That way, if you see that the market is following through one way or the other, you can simply take action and trade that side of the market. The market is getting to a point of short-term oversold here. Now, what would we need to see for the market to go back up into a bullish phase? Well, we're going to need to see, obviously, the market going up, but we're going to need to see some of these sectors stalling that are making new lows, and some of these stocks continuing to show their strength as they move to the upside. So if we look at some of the stronger sectors like the energy and oil services, we're going to need to see that strength come immediately back into the market. If we start seeing these sectors starting to fail, i.e. putting in a move towards their new high and then stalling and then selling off, that's telling us that the overall market is not very healthy. So I'm really not looking to get long for the long term. If we get a short-term bounce in the market, I'll be looking to the stronger sectors and the stronger stocks within those sectors. If we get a short-term bounce and then start selling off again, I've given you a list of some of the weaker ETFs, and hopefully you can whittle those down and find the individual stocks within those sectors that are showing some extreme relative weakness as well. Hopefully this video has been of some help to you, and we'll continue this series and continue reviewing the market for the entire month of August. And as always, we hope you visit our blog, and we'll see you next time.